as to what's happening at Jyoti CNC. The management is joining us. Mr. Jadeja is joining us, the chairman and the MD of Jyoti CNC, to talk to us about the way going forward. Hi, Mr. Jadeja. Good to be speaking with you. Thanks so much for making time and speaking with us. In terms of the other internals that we're looking at in terms of the earnings, the revenue is pretty much flat, but the profitability has seen quite a bit of good growth and it's coming closer to 100 crore rupees. And the order book also continues to be quite strong. In the coming year, what kind of growth rate should we expect in terms of top line and profitability?
Hi, thank you. I think we will maintain our momentum. The way our order book is, even this last quarter also has rose very well. And we have executed close to 400 plus, and our order book is mostly at around 600 crore plus. So the momentum in terms of a revenue and a margin side also is going to be improved in coming quarters gradually to be there.
So the street is clearly penciling in very strong growth for the coming next 2 to 3 years, and they're talking about a revenue profile of almost 3,000 to 4,000 crore rupees for you. When do you see yourself achieving that number?
So let's say this year we are increasing our capacity, and the capacity will come in a place in the next 1 or 2 quarters, and we'll see the improvement on a similar trend to be there. We have committed to our customers to deliver this all, whatever these our order books are there, we have to deliver in 1 to 1.5 years there.
Does that mean 3 to 4,000 crore top line is possible within 3 years with a EBITDA margin of 25% thereabouts?
That's look likely to be there. Let's see.
Surely we will watch out for that number in the next 3 to 4 years, at least on your top line front. But what about your margins as well? What is the expectation? Because this time we're seeing a sharp improvement in terms of margin expansion there. So do you think these margin levels that you've seen this time of around 29%, that is something sustainable in FY25?
Yeah, the margin we are looking to be a sustainable and looking to be a little bit to be improved there. And the model mix, let's say the defense and aerospace, the way this order book is in our KT today, once that been execution, the margin is to be stable and to be from here to be little bit improvements. So we will see that.
More improvement from this 29% is what we are seeing, and given that order book also you're talking in aero as well as defense space, which is leading to the better improvement in terms of margin. So what is the current order book that you're seeing in aero and defense side, and what is the outlook for FY25 there?
So basically today's our order book is close to 1900 crores from the aerospace and defense, and we are looking to be a similar number to receive further more orders. There are more pipes are there. In India also, there are a lot of budget as government has given to all the defense companies, and we are already are talking to them and received all the RFQ and everything. We are working with them, and as well as even the global. Right now, there are a lot of investments are going on a defense side. So we are looking to be a very strong order book in this coming year. Every quarter to quarter that will be improved there.
Right, and sir, just one more thing I want to know is in terms of the EMS segment, right? What is the outlook there? Just a short while ago, we spoke to Dixon Tech also. They were saying how this EMS industry overall is seeing a very good growth across the segments and across sectors. What is it that you are seeing for the company? 13% contribution now coming in from EMS. What is the growth there expected?
So we are looking to be the EMS in the next 1 or 2 years will reach out to close to 25 to 30% of the total revenue. Is a 1/4 of our total revenue we are going to see in the next 2 to 3 years time in EMS. It's the fastest growing sectors, and we are working with them very well.
What could it become in terms of, let's say, the total size for you? Because the competition is also heating up. A lot of companies are getting into that, right, from Keynes, Sirma to other companies as well. And what's the export potential? Because right now it's almost 40% of your business already. What could that scale up to?
So basically, let's say in EMS business, right now these are, let's say we are manufacturing the machine CNC and supplying to all these manufacturers. And particularly those are the mobile manufacturing, the watch manufacturing, and all kind of this equipments like that. Until today in this space, Japanese was always to be dominating. Even in China also, all the people are using the Japanese machine. So there we got this entry and we have a nice opportunity to be there. So there is not in terms of here is a much competition. We have to prove ourselves much better over there, and we prove out there. and we entered very nicely to be there. In terms of your questions about the exports, yes, we are looking to be a 40 to 45% to be maintained on the next 2 to 3 years on export side to be there. We are going to be a balanced in India and exports business to be there.
Okay, so looking for those niche areas to make sure that you have enough market share and not losing out to competition. Thanks so much, sir, for making time and speaking with us. A pleasure speaking.
If you like this video, then like, share and subscribe to ET Now.